President Trump adding 34% tariffs to those he had already imposed on China. Let's get to Eunice Yoon in Beijing with the reaction. Positive?
Maybe not. But, Joe, the effective tariff rate now on China is around 70%. So this is how it stacks up. After President Trump had took office, he had hit China with 2 rounds of 10% tariffs to pressure the Chinese on fentanyl. So then this new 34% so-called reciprocal tariff, this reflects a 10% universal baseline and then a 24% tariff that is specific to China. So the 10% goes into effect on April 5th, the higher one on April 9th. And these tariffs come on top of the tariffs that were imposed during President Trump's first term. So those range between 10 to 25%. And then on top of that, you guys were talking a little bit about it, that President Trump said that he's going to end the trade loophole on May 2nd that had really been beneficial to Chinese e-retailers such as Shein and Temu. They've been able to ship a lot of goods to the United States duty-free. So in response, the Chinese Commerce Ministry vowed today to take, quote, resolute countermeasures. And based on what we've seen of the Chinese responses in the previous rounds, the expectation is that they're not only going to hit back with counter tariffs, but also with their expanded retaliation toolbox. So this would potentially include tighter export controls for more critical minerals, as well as going after individual U.S. companies. In fact, Macquarie said that they expect Beijing to go that route as part of a broader effort to try to support Chinese suppliers and push more of the cost onto U.S. customers. If you guys remember, I'm sure you do, that Walmart was summoned by Beijing to end that practice of pressuring the Chinese suppliers. Another big point that people have been talking about today is that there could be a larger than expected devaluation of the renminbi in order to try to help the Chinese suppliers. But I think the big point is that it's very unclear what else the Chinese would be able to do to really offset a 70% tariff. And that's one of the reasons why Citi is expecting that the economy here is going to get hit by 2.4% this year.
That's what we also need to factor in. Who can stand? There's going to be pain here. There'll be pain there. There'll be pain at all the countries affected. Some of them are very dependent on the United States. And I think that's the hope. I would have to think in the back of the administration's mind that a lot of our trading partners say uncle first. And if they don't, then we get the trade war and the retaliation and no one wins. But I think at least that's the rationale, even with China.
Yeah, that is the rationale. And the Chinese suppliers are definitely dependent on the U.S. A lot of the people that just this week, I was talking to auto parts suppliers who said that they wanted to keep selling to the United States. But I think what's interesting here is that the policy doesn't appear to be China-specific. So, the tariff for the Chinese is 70%. But I was looking at Vietnam, it's 46%. For Thailand, another competitor to China, 36%. If there's some sort of deal with the U.S. where China's tariff is lowered, then suddenly you're not really pressing the Chinese in the same way as maybe you could if you were hitting China with all the tariffs as opposed to some of its competitors.
I guess if you're a rabid trade hawk, which there are some in this administration advising President Trump, you would say, we've had this clout all along, and we haven't used it. We've been big patsies, and we've let these smaller companies sponge off in a lot of ways, smaller countries, and now's the time that they're going to try. But I don't think anyone knows what the end result is, and whether it's a zero-sum game where everyone loses. I don't know. Thanks, Eunice.